Hello and good evening everyone. Welcome to a new episode of Investing Fool where we discuss about DIY momentum investing. In yesterday's video we had discussed the rebalancing, the end of August rebalancing for our core momentum portfolio, which is based on the Nifty 500 index. And in yesterday's video only I had mentioned that I'll be making another video for the Nifty 50 top 10 portfolio rebalancing at the end of August. So today's video will be regarding that. So it will be in a similar vein, a similar pattern as yesterday's video. I'll try to keep it short. We'll take a look at the core portfolio also, probably at the end. वैसे like market में ज़्यादा कुछ हो नहीं रहा है. The market is going nowhere. It's kind of range bound. Broader market stocks are performing some day, some other day they are not performing as much. But overall, my view of the market is that, and there can be like many assumptions on that, like right. There is no point in trying to guess which way the tide will turn, which way the market will go. But there are certain people who would say that because rate cuts are coming, market could have a mid-September rally and then it could fizzle out. Some others could say that there would be no rally because most of the things have been priced in, and uske baad market could see some recovery. But usually it has not recovery. The market has been recovering for quite some time, has been going good for quite some time. But in general, it has been seen कि rate cuts आने के बाद for a few quarters. So we have to understand why rate cuts are happening, right? Rate cuts are happening because the Fed is and the governments are anticipating that we have squeezed growth to the point that beyond this it will be destructive for the economy, right? So we have to loosen the economy a bit, we have to increase the liquidity a bit, and then the growth will we have to just increase the growth a little bit, but while trying to keep inflation as low as possible. So that is kind of the angle with which they go. So they want to have a good balance between growth, which affects employment, and inflation, right? So between these two, the Fed is kind of squeezed, and when they do these rate cuts, right? So the economy is already in a little bit of stress, for sure. And after like a few quarters after the rate cuts, the real impact of the higher rates tend to get pronounced. And uske baad sometimes it happens that the stock market kind of rallies a little bit after that, right? So there is kind of a lag also there. But anyway, like these things are different every time. There is no set pattern, otherwise everyone would be deploying their capital accordingly, right? Because everyone is trying to second guess everyone else. Anyway, like lots of talk about the Fed rate. We are anyway not in the game of predicting where the market will be going. So let's just get started with the Nifty top 10 portfolio discussion. As always, no financial recommendation from our side, so please consult your financial advisor before making any investments. These are just for educational purpose. Okay, so in terms of the trends for August rebalancing, as I said, right, Nifty is really not going anywhere. If we look at the like 6-month returns, it's close to 13%, right? So the average of Nifty, the average CAGR of Nifty for many years usually tends to hover around 13%. So you are in a way seeing कि 6 महीने में उतना रिटर्न आ गया है जितना यूजुअली on average एक साल में आता है, right? So there needs to be some tempering of expectations. These kind of returns are not sustainable. I'm not saying that the market will correct or anything. These returns can go haywire for a long time. But if the larger or the more they deviate from the normal, the higher is the probability that some time correction would happen, and it would stay on for longer as well, right? So that is something that we should always keep in mind, and we should have our expectations in that way. The best thing that you can do in the market is to not have any expectations at all. but if you have any expectations, then it is important to be realistic. Our Nifty top 10 portfolio, which we started at the beginning of March, that is up around 17.7% against 13.2% for the Nifty 50 core index. This is all pre-tax returns. Will also show a post-tax returns. Actually, I'll include that in the core portfolio sheet. In Nifty 50, also I'll try to include, but it will be difficult to beat in terms of post-tax returns a large cap index, right? And that is why you get these reports like SPIVA and all, which time and again illustrate that almost like 80 to 90% large cap fund managers do not beat the index. They are not able to beat the index. It's not very easy to beat the index. Most people would say कि हाँ index को beat करना बहुत easy है, but it's not easy, and it's definitely not easy when you're talking about like Nifty 50 or Nifty 100 stocks. Okay. But anyway, we'll discuss the post-tax returns and everything in a separate video as well. And so in terms of the rebalancing, what is changing in the portfolio is that we have 3 exits and 3 entries this time, and a couple of IT stocks have come into the portfolio. So let's just take a look at the portfolio and we'll then just cover all these exit metrics just like we covered yesterday. So if we see, so this is a portfolio of 10 stocks that we create from the top 50 market cap stocks of India. And if we look at the stocks that are highlighted in green, these are the stocks that have entered the index, entered the portfolio this time around on 2nd of September. So 2 of these are IT, the third is SBI Life in the health insurance and life insurance segment. So if we take a look at the exits, so if these 3 stocks have come, then which 3 stocks exited, right? So these are the 3 stocks that we exited. One of them had been in the portfolio since the beginning, from the beginning of March. So that is Coal India. It left with 17.6% gains. Grasim, which we had added recently, actually not much time. It spent barely like 2 months, a little more than 2 months, and it did nothing, right? So these are the stocks that kind of waste the most of your time. At least Grasim didn't waste as much of time. 2 महीने में निकल गया, but sometimes stocks can just stay on for like 5 months, 6 months. They're just not doing anything, not going anywhere. They will exit finally with 1%, 2% gain, or 5% loss, or 5% gain, something like that. So they are kind of inconsequential. So Grasim, at least it spent 2 months and not more. The third stock that exited was Power Grid. Power Grid stayed for 3 months. The gains were around 9%. So if we look at the exit metrics for this Nifty top 10 portfolio, so the winner percentage is up to 45.45%. Losers is a bit down for 54.5%. Average holding period is 83.5 days. So if we look at the average holding period of our core portfolio, that is around like 73 days. For this Nifty top 10 portfolio, it is more. So there are 2 factors at play here, right? So the good thing in the core portfolio is that we have a buffer. We have a like 20 stock portfolio. Okay, now it's 21, but the worst rank held is at 50, right? So you have a buffer of 30. So a stock can start falling from like 20th rank to 25, 30, 35, 40. As long as it doesn't drop beyond 25% from its all-time high, and it's like within the top 50 ranks, it will continue to stay in the portfolio, right? So that way the churn is less, and hence the probability for a stock remaining longer in the portfolio should be logically higher, right? In this portfolio, we literally have no buffer, right? We have thought about extending it to 15. We'll probably do it in the next cycle only, but at the moment, what is like how it is constructed is anything that goes beyond rank 10 is just kicked out, and anything that new stock that comes into the top 10 ranks, that is added to this portfolio, right? So if we have that, the probability of churn increases. So if we see Power Grid had already entered in at the beginning of the portfolio and had exited in 1 month with a loss of 2.6%. Again, it entered like 3 months later, and now after in the second stint also it stayed for like 3 months. It gave a gain this time around, and it's again going away, right? So there is churn, but the other factor that kind of balances it out, at least in case of this portfolio, is that these are like very large cap, mega cap, giant stocks, right? So they typically they do not tend to move around a lot. Like the volatility, the movements are less pronounced as compared to like a mid cap or a small cap stocks. So that is why, or even like a stock that is not in Nifty 50, right? So these stocks typically tend to move little bit lesser. So that is why that is probably one reason why the stocks could stay on a little bit longer. So these two effects actually like work against each other, so they kind of balance out each other. But yeah, but I'm thinking from the next cycle, anyway, to like reduce churn, we would have a buffer till 15. So any stock that drops from 10 to 11 till 15 will still probably have it, and if it drops beyond 15, then we'll eliminate it. But anyway, coming back to the slide, what one thing that we need to mention here, so average gain percentage, if we see here, so average gain percentage has actually improved from 9.9% to 11.2%, and average loss percentage has also improved. So from negative 4.4%, it has improved to negative 3.9%. So there is a clear divergence that is happening, right? The gainers are providing on average 11.2% gain. The losers are providing on average 3.9% loss. So the difference between two, so plus 11.2 minus 3.9, this is gradually widening. It doesn't always happen, but this gap widening is a good sign, that it conforms to the fact that plagues most of our portfolio, which is that a few winners will always drive the majority of your gains. And in terms of the few stocks that are driving gains, if we look at the current portfolio, it's mostly auto. So this portfolio is kind of auto heavy, and the good thing is that these auto stocks have been driving most of the gains. There has been a lot of talk recently about autos not performing well, and because they have been performing so well for many years, this could be the start of a cycle in which they may not perform as well going ahead, at least the four-wheeler space. Two-wheelers are still, I think, in good stead. But if we look at the returns, right, so the highest return is from Bajaj Auto, 37.4%. A couple of months ago, this was M&M. M&M had the highest returns. So now also M&M is at like 27.4%, Tata Motors at 8.7%, Hero MotoCorp at 25.3%. So if you look at the largest four gainers, three of those are auto stocks, right? Mahindra and Mahindra ho gaya, Hero Moto ho gaya, Bajaj Auto ho gaya. The rest are kind of just dilly-dallying around. So that's something that we should keep in mind. Okay, let's look at the charts of these stocks a bit, and then we'll take a look at our core portfolio. We'll take a look at the sectors, and then we will close this video. So if we look at Coal India, stayed for more than 6 months, and if we look at these three charts, Grasim, like the chart doesn't look as predictable or as consistent or as smooth as I would like it to be. The smoothest I would say is Coal India. And although Coal India has dropped below the top 10, I feel the momentum, the overall trend still looks very consistent, and it could continue to go higher and higher from here on. Power Grid has kind of slid down from the all-time high, and is kind of range bound. It's going maybe through a time consolidation. And let's look at the let's look at the charts of the entering stocks. So all the exiting stocks, as you can see, are because of the worst rank held criterion. We do not have any secondary criterion in this portfolio. And if we look sorry, if we look at the incoming stocks here, so Infosys, HCL Tech and SBI Life are the three stocks. So exits, if we look at the exits, they are largely from capital intensive sectors and PSUs, right? So Coal India ho gaya PSU, Power Grid ho gaya PSU, even Grasim is in cement. So all these are like really capital intensive sectors. The new stocks that are coming in, and this is not about sector rotation or anything. Of course, there is a bit of sector rotation angle because IT stocks are coming in, but the new stocks are not capital intensive stocks, right? They are kind of asset light stocks. So IT stocks and insurance both would fall in that category. And IT has been the best performing index over 1 month, and I think over 3 months also. And if the rate cuts come, if the Nasdaq goes higher and higher, then that should bode well for Indian IT stocks as well. However, some niche IT stocks, some mid cap IT stocks could probably perform much better than these large cap stocks. But because in this portfolio we are anyway constrained to Nifty 50, so as of now, Infosys and HCL Tech are probably our best bets in terms of large cap IT. If we look at the charts, the charts look very similar for both of these, right? They started rising sometime around March. They then went through a kind of a brutal period, not really brutal, but it seems like the market had like given up hope on them, and then again the story started. Whenever something new comes, like generative AI can come, right, and someone would have this apprehension, not someone, like a lot of players would have these apprehensions ki margins would be gone, contracts would be gone, nothing would come and all that. Somehow the players are IT players, even if they are not innovative, they kind of scrape through, I would say. They try to find around ways on how to deal with these new factors. And anyway, now probably some of those apprehensions have been shed. Generative AI, no one is like people who are in generative AI are talking about generative AI, but the stock market participants जितना हो हल्ला पहले कर रहे थे कि all the IT stocks are gone and all. IT has made a tremendous comeback, and it looks like no one is at least now saying that this rally is kind of stretched or anything, right? They can continue to make new highs. So the charts look promising, and the most promising of these charts is SBI Life. It has been gaining momentum after quite a bit of time, and the momentum looks stronger as well. So if we look at the 1-year returns for these three stocks, considering they are large cap, so Infosys 32%, HCL Tech is 45%, and SBI Life is at 45%. RSI 68, 74, 78. Moderate in terms of momentum stocks, they are still fine. Typically, like we consider anything above any RSI value over 70 as overbought, but we have seen much greater range in our regular core portfolio, right? So let's, speaking of core portfolio, एक बार नजर ले लेते हैं कि क्या चल रहा है in today's market. The advanced decline ratio was 2.4, so more than twice the number of stocks were actually in green compared to the ones in red. So let's just discuss the ones in red. Torrent Power down 3%, Trent down 1.1%, Godfrey Philip down 1.9%, and net it has come in negative now. We had added this stock yesterday. And in terms of the positives, Hindustan Aeronautics, for a change, this was 3% up. I'm not sure what has happened. And many players might get excited ki, oh, is this the turnaround again in defense stocks? And it very well may be. If we look at the fall from the all-time high, so Hindustan Aeronautics is still like 15% from the top, which is not really a major fall, right? If you look at something like Cochin Shipyard, Hindustan Aeronautics has still fallen moderately, I would say. It's a like mega cap stock. So if it turns around from here, good for us. If it doesn't, anyway, we will exit. Kalyan Jewelers has been going up consistently for quite some time. This is now the stock with the second largest gain in the portfolio, 72.1%. Inox Wind was also up today. Dixon, after yesterday's fall of around 5%, it was up 3% today. OFSS in IT. So in IT, like we saw, Infosys was down today. HL Tech was down today. Both I think were down in the 1 to 2%, negative 1 to 2% ballpark. But OFSS was up 5% today. PCBL was up 3.5% today. So this is how the portfolio was looking. If we look at the sectors once, so let's see which sectors performed well today. So banking was good, financial service was good. I think all of this, like the movements in banking and financial sectors stocks, is mostly related to the news around rate cuts. Key once liquidity starts gushing in, because people have been saying that private banks and NBFCs and everyone will perform. The question is, when will they perform? So this gives a trigger point to these folks ki, okay, now rate cuts are coming, right? So RBI will also do some rate cuts, liquidity will come, and all those issues around NIMs getting squeezed and everything, they might be elevated to some extent because of credit growth in the country, right? So banking and finance stocks were in green today. Pharma was in green today, but if we look at the index, nothing much happened. As we discussed, Nifty was absolutely 0%, so like literally 0% returns. And Nifty 500 hour benchmark was also up just 0.12%. If we look at the 1 month change, so this is where you can see the winds of change, right? So Nifty IT is leading in the last 1 month performance by a huge margin. So it's the only like double digit growth in the last 1 month. In the last 1 week also, it is the best performer, and the next best is Nifty Pharma, right? So IT, Pharma, both are defensive sectors, but you can see IT has been performing for some time now. Consistently, it has been performing, and with this rate cuts news and all, this might get accentuated to some more extent. And whenever you see stocks like sectors performing, gradually they will start to get into your momentum portfolios, right? So just like OFSS got into our core portfolio, and now yesterday in the Nifty top 10 portfolio, Infosys and HCL Tech came. We just discussed about that, right? So as sectors start performing, as sector rotation always keeps happening in a bull market, like from one to another. Maybe it is the time of defensives now, but if IT is performing, you will gradually start to see more and more IT stocks coming into your momentum portfolios, and if they continue to perform, then they will continue to remain, and you will continue to get rewarded for holding them. So anyway, that's it for today. If you haven't subscribed to the channel and are new, please consider subscribing to this channel. Please comment on the videos. Your questions and your comments keep us motivated to think about this more and to do this in better ways. So thanks for watching till now. I hope this wasn't very long, but I'll take a break, and let's see you in the next video. Bye bye.